Hello, everyone. This is Ted Bauman here, editor of Bauman Daily, of the Bauman Letter, and of Profit Switch. Before I start talking about today's topic, I just want to alert you to the fact that I've got a very interesting event coming up pretty soon, and it's going to be with Keith Kaplan, who is the CEO of Tradesmith, which is an organization that really does something incredible for investors. It takes a lot of the heavy lifting out of knowing how to trade the positions that you have. I'm good at looking for stocks opportunities. Keith and his crew are good at figuring out when to enter and exit those positions to make the most you possibly can. So please look below for a link to the sign up for a special event that I'm going to be sharing with Keith coming up soon. Anyway, let's go on to today's video. Today I want to talk about silver and where silver fits into the bigger economic scheme of things. The big talk this year, as you know, has been about the potential for a rebound in the real economy, which is essentially the everyday stuff that we do, as opposed to the unreal economy, I guess you can call it, of technology stocks and all the sort of digital stuff. So what's been happening? Well, first of all, we see that the price of commodities like copper has been skyrocketing. The Chinese government recently took action to try to crack down on copper price speculation in that economy because it has actually been rising towards world record prices. And of course, that's been good for copper miners. We hold at least one in my Profit Switch portfolio. Now, fundamentally, silver is not seen as a industrial metal, even though it actually is. Most people see silver as either a form of used for jewelry or as potential store of value as an alternative to gold. But in fact, the copper price pressure over the long term is usually based on industrial use. And if the economy is rebounding, then we should expect an increase in the price of silver over time. Now, the problem is that because silver is also bought as a store of value, people buy little bars, they buy silver coins and so on. Sometimes you get a bit of a collision between overall demand and actual ability to supply at the moment, which leads to a spike in silver prices. And I'm going to show you why that's a potential play for you if you want to try it. Now, let's talk about what silver is used for. Well, in the old days, silver was consumed for a variety of things, including surgical instruments, some electronics, but mostly in terms of the old photography industry. I mean, basically, film uses silver. It used to use silver, and that basically vanished in the 2000s. Now, silver is a big player in photovoltaic panels. It's used both in the the kinds of panels that solar systems use. It's also used in vehicles. It's used in electric vehicles in particular. And the reason is because it's one of the best conductors of electricity out there. It's far better than copper at conducting electricity. So the more silver you use, the higher the efficiency of your actual product, whether it's a solar panel or an electric vehicle. So given the fact that lots of people are predicting, like me, are predicting a big boost in the renewable sector and also in electric vehicles, then why aren't we seeing a spike in the silver price? Well, there's a couple of reasons. Number one, there's doubts about the ability of the Democrats on Capitol Hill and the White House to actually pass a big infrastructure bill, particularly one related to renewable energy. And that has made investors reluctant to put their money into silver right now. The second thing is that there are cross-market liquidity effects. I've spoken about these in Monday's Your Money Matter videos. What happens is that when you get a lot of liquidity flowing into other markets like cryptocurrency, it pulls money away from potential speculation or investment in things like silver futures. I know that on the Reddit, the stock market at Wall Street Bets part of Reddit, there's a lot of talk sometimes about silver. There was earlier this year about a short squeeze on it and so on. So those people are participating in both of those markets. And when you get a movement of money away from something like silver and into crypto, then you see a decline in the silver price, even though its long-term future might be better than you would think. But that's starting to change. And here's a chart that shows the price of or rather the value of silver in terms of the number of ounces of silver that it would take to give you 1 ounce of gold. Now, over time, it fluctuates. It dropped a lot during the 90s, mainly because the price of gold was rising. It rose again, or sorry, rather because the price of silver was rising and the price of gold was falling. But during the 2000s, we saw it go up and down a bit. But one of the interesting things was that during the the 2008 financial crisis, the price of gold rose and the price of silver fell. That blue line, as it goes up during that recessionary period, what you're seeing is that it takes more silver to buy an ounce of gold than it did before. But then look what happened. You see that just precipitous drop in the ratio. And what that tells you is that either the gold price was falling or the silver price was rising, or both. In fact, what happened was that the silver price skyrocketed. I'm going to show you in a moment how that happened. Since then, gold has recovered relative to silver, and it reached an all-time high in relation to silver in the beginning of 2020. But then look what happened, another big drop. We're starting to see a recovery in the silver price relative to gold. Now, the reason that's important is because it's an important benchmark that shows you the relationship between silver as a store of value and silver as a potential industrial metal. All other things being equal, if the demand for silver for industry, for making real things starts to increase, then you're going to see that line go down. Silver is going to become more valuable relative to gold. And that in turn will attract speculators who want to buy silver to hold it to benefit from its price increase. And that sets up the possibility of a clash between supply and demand, which can lead to short-term spikes. Now, right now, we do see that silver is in an upward trend. Here's a chart that shows essentially higher highs and higher lows, which is what you want to see whenever you're trying to track an asset price. Recently, silver has pulled back just in the last week or so, but fundamentally, I would say that the next target level for silver would be around $29, which I've targeted up there. It's been as high as $30 earlier this year. You can see on the left-hand side of the chart. But then it pulled back. That tells us that the market wasn't comfortable with silver at that price yet, and that probably was premature. I think it went up because there was a lot of speculation back in February, just after the inauguration, that the Democrats were just going to start spending money immediately, which of course they weren't able to do other than the stimulus. They're still working theoretically on an infrastructure proposal. Anyway, what we're seeing then is that the market has got consistently better opinion of the silver price. It's gone from a low about $24 up to where it was when I captured this chart at around $27.66 an ounce. And if it gets up to 29, I think that could be a significant trigger point. If it gets there, then we're going to start to see the kind of action that I'm referring to. Now, what I'd like to show you next is precisely the same sort of price action that we saw just before a big price spike in 2011. On April 25th, 2011, silver traded for nearly $50 an ounce. That's the first time that had happened since 1980. During the middle of the inflationary boom in precious metals like gold and silver back then. Now, here is a chart that shows that relationship. What it's giving you is two things. First of all, you can see that big spike that I talked about. It's just somewhere in the silver market, silver traded at about $50, at least during that day before closing a little bit lower on that particular day. Then the price fell, but it took a while to fall. But what I want to draw your attention to is that little rectangle on the left-hand side. First of all, look at that sloping line upward. It's very similar to the sloping line that I've drawn on the other side of the chart, which is today's price action. So you see the line sloping upwards, a little steeper now than it was back then. But fundamentally, it went into a consolidation period just before it broke out. Now, over on the right-hand side, I've put a box around the current consolidation that we're seeing. And my thesis is that if we see the price break out above about $29, certainly above $30, then we set ourselves up for a potential spike in the silver price. Now, why did this happen in 2011 and why might it happen today? Well, in 2011, recall that we were just still reeling from the collapse of the mortgage market in the United States and all the secondary derivatives and everything, the global financial crisis, the collapse of Lehman Brothers, all that sort of stuff. The Eurozone was on the brink of a breakup. Greece was possibly leaving Ireland, Portugal, Italy, and Spain were all facing sovereign debt crises. Now, in the US also, people were still wondering what was going to go on. The stimulus bill that had just been passed by the Obama administration was nowhere near enough to really address the recovery at the scale that was needed at the time. And as a result, people were pessimistic about the future. Job losses were continuing, wages obviously were not growing, and so on. Now, what happened then is that people began to buy silver as a potential hedge against a collapse of the dollar. They worried that if the global economy didn't recover, they wanted to have something. So gold is one, silver is another. A lot of people swear by silver as an alternative to gold. Now, unfortunately for those guys, the short-term demand for silver as a hedge began to run into speculative thinking about what was happening in the background of the industrial market for silver. Now, at the time, as I said earlier, silver was used primarily for photographic uses, but also for some other industrial uses. But then people began to talk about the use of silver in photovoltaic panels, where it's made into a paste, silver, and then used as part of the construction of solar panels. So what happened was that people said to themselves, we want to hedge against the potential collapse of the economy, so we're going to acquire silver to keep, in our safes. But B, a lot of people are talking in the market about a growing industrial demand for silver going forward. So we better go out and grab some now before the price spikes. So then you had people calling in to all these precious metals dealers, wanting to buy bars, wanting to buy coins. And that set up a price spike that was based on the belief that the price was going to rise. It became a self-fulfilling prophecy. So essentially, though, the truth was that in 2011, the solar panel industry was just starting. So when people realized that that was not going to happen as quickly as they had thought, then the demand for physical silver as a store of value, as a hedge, collapsed. So that price spike that we saw in 2011 was driven by the expectation of economic problems in the future colliding with secular increase of demand for silver coming from industrial uses like solar panels. So what do we have now? Well, right now, we have a similar situation. There's been talk about inflation. It's kind of dialed back a little bit recently, but fundamentally, we're looking at a sort of a pullback in inflationary fears over the last couple of weeks. That's what drove the earlier price of silver spike up to about $30 in February this year. We're starting to see it tick up again, and I think it's because people are expecting that silver could be potentially a good inflation hedge. But we're starting to see the same thing that happened in 2011, which is people talking about the sudden boost of demand for silver that comes from its use in renewable energy and electrical vehicles and all that sort of stuff. Now, here's the critical thing. When silver is used for those kind of industrial uses, it has to be of very, very high quality. It's 0.999. Which is basically, 0.9999. That's almost the finest silver you can possibly get. That's the one that the industrial people want, right? And the demand for that silver then spills over in the demand for lower grade investment level silver, which is 0.999 quality. Now, that leads people to think, well, I better grab some, because if the price of industrial grade silver is going to go up, that'll spill over into the price of the silver that I want to hold. So then everybody rushes out and they try to acquire silver ounces and all lots of other things like that. And then that becomes a self-fulfilling prophecy again. The price spikes. Now, here's the critical difference, though. In 2011, the renewable energy industry was still just a dream. It was there, but it hadn't taken off. Now it is an everyday reality. It's the cheapest form of electricity in the world today. And we know that there's a high likelihood that we know the Chinese are going, hell-bent for leather to build solar farms. We've got a position in the Bauman Letter that is doing extremely well, that provides utility scale solar, and those require a lot of panels, which requires a lot of silver. So unlike 2011, there is something to this industrial demand thesis. So if the price of silver spikes between now and let's say later in the summer, it's quite possible that it will retreat from that high spike, but it will remain at a higher level than it has been previously, precisely because there is a higher industrial demand for silver. So my advice would be get in at silver now at around this price, below $30. It could potentially spike up to 50. You might want to take profits there. But whatever you do, I think you're likely going to see a higher silver price over a longer period than we saw after 2011, which makes silver a pretty good bet right now. One way you can play it is through the ETF SILV, obviously. You could also buy silver miners. As I mentioned earlier, we do hold one in our profit switch portfolio, which on the day I recorded this had a big price pop, I think about 4% in one day. So there are lots of ways to play silver. That's my thesis. I think we're looking for a setup of the similar situation we had in 2011, but with a better resolution for you as the investor in silver. Anyway, this is Ted Bauman signing out. I'll talk to you next week. Bye-bye.